The world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, FinTech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're thrilled to be joined by Gregg Schoenberg. Gregg runs the Financial Revolutionist, a weekly newsletter touching on some of the most interesting developments in financial innovation and linking them in thoughtful ways to all sorts of social and cultural considerations. Prior to starting the Financial Revolutionist, Gregg was a senior executive at Natixis, a French bank, where he ran equities. The Financial Revolutionist is published weekly, and you can subscribe at www.thefinancialrevolutionist.com. Some of the highlights from recent editions include interviews with Max Levchin, Jay Fulcher, and others, and some really fascinating thinking about how the world is likely to evolve between now and 2028. In this far-reaching conversation, we dig into topics ranging from career reinvention and the future of work to universal basic income, the role of crypto in campaign finance reform, and much more. Connect with us on Twitter at Rebank Podcast or on Facebook or LinkedIn. You can access our entire back catalog at www.bankingthefuture.com. Thank you very much for joining us today. Please welcome Gregg Schoenberg. Gregg, welcome to Rebank.
Thanks, Will.
You run the Financial Revolutionist, one of the leading FinTech, if we can call it that, newsletters around the world. Tell us about the Financial Revolutionist and why you started it.
So thanks very much. Appreciate the kind words. My partner, Rob Jager, and I had been doing some FinTech advisory work for some clients after having each spent some time in a variety of FinTech-related capacities. Unfortunately, in 2015, I was given the very sad news that my mom had late-stage lung cancer, and I ultimately opted to move home for a period of time so that I could be involved in her care. So I really couldn't service clients. And Rob, who knew I enjoyed writing, suggested that I start a newsletter for us and that he would figure out how to distribute it. And it was really just to kind of get our name out there while I was out of commission. But as these things happen, we were fortunate enough to have it generate some traction. And in the mid to late 2016 period, we ultimately decided to use the newsletter as a cornerstone of a media business, which is our focus today.
So before you and Rob got together, I seem to recall you having some pretty high-ranking positions in the traditional banking and finance space.
Yes, in the traditional banking space, yeah. I was a capital markets banker at a tech bank by the name of Cowen. And then I moved over to the French bank Natixis, where I ran U.S. equities for a period of time. Rob worked as an ETF trader at Goldman and was then a senior guy at Market. And he also ran the equity division there leading up to the company's IPO. So we both have an equity background and a capital markets perspective, with me more involved in new issuance related work, and Rob was more involved in data and analytics.
Mm-hmm. Well, knowing you now and the breadth of your interests, it doesn't surprise me at all that you eventually left that traditional banking markets space. One of the topics I wanted to pick up with you today was around career reinvention, and I think it's particularly relevant. We have a shared interest in kind of the future of work and the way that that some of these changes in technology are likely to impact working professionals around the world. How do you think about career reinvention? Maybe specifically for financial services professionals?
So that's a very timely and relevant question for me. Look, I'm in my 40s, and many friends I have, ranging from, I would say, their 30s to 60s, are in a struggle right now, trying to figure out what to do after a life on Wall Street or within a law firm or within the bowels of a big corporation. And I've certainly talked to many of these friends and colleagues and ex-business school, pals, and tracked my career. I've certainly made some mistakes along the way, but one of the things that I did right as part of my own reinvention journey is when I left Wall Street, I decided to become what I like to call the dumbest guy in the room for a while. And what that means really is that, I wound up taking classes and seminars at various technology schools like General Assembly in New York. And I knew that I would never be a Python guru. But, I sat there in these classes where I had 24-year-old instructors roll their eyes at me because of the stupidity of my questions. But I didn't care because I wasn't looking to become a developer. I wanted to get the basic gist because I believed in the power of software to basically, upend the world. And I wanted to at least have a rudimentary understanding of that because I knew that whatever I did next, it would involve technology in some way. My big takeaway about career reinvention is, if you want to do that, you need to be really committed. You need to figure out how to repurpose the assets that you do have while mitigating your weaknesses, which in my case was around my ignorance around tech. Other people have taken different pathways, but I think you have to be willing to take a few steps back in order to go forward on a new one.
I like that. I think it's a very powerful message. I can think about a handful of times in my life when I've found myself in that position, and not only is it a nice, humbling experience, but it is one that, as you say, kind of unlocks various elements that maybe you didn't know you had, right? Because you kind of have to do away with ego, and therefore, by doing that, you're actually free to make decisions for better reasons than this is what society expects me to do, my parents expect me to do, it's the natural next step in my career, and on and on. And you actually have more freedom over how you decide to deploy your skills and your time.
Totally. I mean, if you were a senior managing director at a bank, and you decide to start up a company, people are not going to care about the fact that you were a senior managing director at a bank previously. And those people who have a tough time getting over that mental hurdle, I think, are not going to sort of go down the path of successful reinvention, certainly as easily. And not to say that it's ever easy, but I couldn't agree with you more. Removing your ego from the equation definitely helps.
Yeah. And I think the same is probably true about failure also, because I think they're very closely related. If you have the humility to go be the dumbest guy in the room, ask the stupid questions to the 24-year-old, then you're probably also not taking yourself so seriously that taking a risk on a future venture which may fail would be the end of the world for you. Absolutely, and I'm sure we've all read the various articles and heard the talks about Silicon Valley's culture of embracing failure and failing fast, and I think that's all tied into it, right? I mean, you can't do something new and groundbreaking without failing a bunch of times along the way. In the worlds of technology and innovation, I think that's understood. In mainstream financial services, I think many people are
are kind of hard-coded to believe that if they do something unsuccessful, or if they fail at something, competitors within their firm are going to use that against them, or they're not going to get as big a bonus. In that way, I think many people coming from financial services moving into the startup world need to unlearn and unbreak a lot of habits that perhaps serve them well in traditional financial services.
So you talked about your own personal career reinvention. You mentioned that a component of that was technology. And I think that one of the themes that you write about in the Financial Revolutionist is around how maybe what used to be traditional financial services, specifically banking, specifically capital markets, even now, some years on from the beginning of the quote unquote FinTech movement, what used to be considered traditional FinTech, i.e. specific to what banks, insurance companies, and whoever else were doing, has now kind of become something much greater than anything specific to one industry. And I think you refer to it as financial innovation, in the way that it's impacting industries from healthcare to education. I'd love for you to pick up on that concept and maybe draw that distinction between FinTech and financial innovation as you see it.
Happy to. And I would just state up front that our newsletter is called the Financial Revolutionist, not the FinTech Revolutionist, for a reason, which is that, in my mind anyway, I define FinTech as innovation used by banks, and asset managers, and financial data companies to serve businesses, customers, funds, but involved in the financial system directly. Financial innovation to me is broader because we want to chronicle the innovation coming out of entertainment and healthcare, insurance industry, and for that matter, government that touches upon finance and financial services. And a point I like to make all the time to illustrate this is Domino's Pizza. Right, so Domino's Pizza probably doesn't get invited to too many FinTech conferences, but it should be on everyone's radar screen if you are interested in financial innovation. It's one of the best performing stocks in the S&P 500 for the last decade. It has outperformed Google and Facebook in the last 2 years. And it hasn't been such a high flyer, I think, because its pizza is so much better than other pizza companies. It's digital ordering leadership, loyalty program, proprietary point of sale system. And so to me, Domino's Pizza is a great story about financial innovation, as is Starbucks to some extent. And, I want to make sure that our publication has the latitude to cover companies like that and what they're doing. And I would add, by the way, it's not just big companies. There are quite a number of startups that I look to highlight that, again, might be classified as edtech or, in the entertainment startup space and the like. But if they're doing something innovative around how you raise capital or distribute capital or allocate capital, then it's fair game for me. And I think that's a much broader and more exciting space to cover anyway. So I'm going to keep doing that.
Well, I love that because I think way too much, quote unquote, FinTech has been looking at solving very specific problems related to the way banks deal with some of their core systems or their payments infrastructure, even regulatory compliance stuff that's very painful for big companies who haven't necessarily invested in systems for decades the way they should have. But I think if anyone expects the biggest, broadest scale change to come through solving a problem for a handful of large banks in a single market or in a handful of markets, then they're probably not thinking wide enough. I think that, sure, some purely financial innovation like crypto assets, new ways of creating, storing, and exchanging value enabled by technologies that haven't existed in the past. Sure, that does have the potential to truly transform the world. But I think otherwise, you have to look at cross-industry examples of the way innovation is impacting companies from a financial standpoint. I think your Domino's example is a great one. I think there are probably many more examples like that in a range of industries.
My friend Bradley Leimer has talked about how financial services in the States anyway maybe is behind China, for example, insofar as having payments embedded into a broader commercial and economic and transactional framework. But when you look at Amazon purportedly doing a deal with a big bank, maybe it'll be JP Morgan, to offer a checking account that is branded as Amazon, I think that speaks to that trend very much.
You read a great piece at the beginning of the year looking at headlines in 2028, effectively your predictions for 10 years from now. Firstly, great move, because when everyone was writing 2018 predictions, articles that frankly are probably not worth reading anymore, and we're a mere two months on, you were writing something that could basically be referred to over the next maybe 9.5. So well done in terms of use of time and energy. But joking aside, it's a fantastic read, and I'd highly encourage everyone to check it out. It's definitely available on your website. We'll link to it in the show notes. I'm sure we'll end up picking up a number of these predictions as we go, because I think they're, one, so interesting, and two, so reflective of your style in the Financial Revolutionist, looking at, I suppose there's always one foot, maybe one toe in finance, and 1 foot in broader industry, culture, society. So one of your predictions is for 2028. So we're going to have a cannabis-fueled, state-sponsored universal basic income in the U.S., which is a fascinating idea, and thrilled to bring it up, because who doesn't like weaving drugs into a banking podcast? But universal basic income is a concept that has been discussed with increasing volume and regularity lately. You did a great interview with Max Levchin last year, in which you guys touched on the subject. Talk us through that prediction. I'd love to hear more about that. What role will UBI play in the future?
So first of all, thank you for that. I actually think it was the interview I did with Jay Fulcher of Zenefits, where we touched on UBI, but I think your broader point is that it's a big deal. It is a absolutely relevant topic for our readers. The UBI articles that I link to and the commentary I write around that have performed well. I'll just start with UBI. Look, from my vantage point in the States, it's a blend of so many things that I care about: tax policy, macroeconomics, the role of technology in our society, kind of the social contract we have, entrepreneurship. It's everything, right? And my general view is interested but not committed to it. And part of the reason for that is, I look across this country and I see a lot of people doing things for free or for low wages that add value to our society. You walk into a hospital, half of the people working there are volunteering. Millions of Americans are staying out of the workforce to raise children or to take care of a sick relative. We have firefighters all over America that don't get paid and volunteer to safeguard their communities. So there's a lot of free work people are doing in this country anyway, and I would love to see some innovation around how to maybe compensate those people before we go to a UBI-based system. But that being said, as it's been pointed out in many places, Alaska already has a form of UBI. And for that matter, through programs like Social Security and Medicare and Medicaid, the government in this country has already gotten into the habit of paying people, and people, in turn, are already in the habit of cashing those checks. And if you believe, as I do, that technology moving forward is going to have both positive but unfortunately very negative impacts on the employment picture, I think discussions around UBI are absolutely positively going to become more prominent in certainly in our elections and in public discourse. But how you do it and how you raise capital to fund UBI programs, raise the money to fund UBI programs, of course, is another story. And when I look at the exploding popularity across many states in this country to consume cannabis-based products legally, I think to myself, there could be a convergence there, right? Because when you look at a state like Colorado, which has been one of the the leaders in the legalization of cannabis, its coffers are doing better than they were and are receiving a lot more money in them than they were, in part because of the fact that they have been very forward-thinking in how to distribute and allow for the distribution of cannabis legally and to tax it appropriately. And when you look across the country and you see so many states who are still in very difficult situations financially, notwithstanding the broader economic growth that we're experiencing here, I see a natural convergence coming where maybe on moral and ethical grounds, some politicians may have an issue with legalization, but the financial considerations will probably win out, and that'll be a whole new trove of tax revenues in which to potentially fund some of these programs. It was a little bit out there, but I put these predictions in place to be provocative and to stir up some thought, and so I appreciate you you taking note of that one.
Yeah, well, there's clearly plenty of thought behind them. One of the other points that you touch on from time to time is and I think you may have actually mentioned it, one of your areas of interest, tax policy and perhaps reform of tax policy. If we project out a few years, you're looking at, I don't know, if you think about broad-based worker displacement, then you've got drops in earnings, you've got drops in income tax paid, you've got drops in government tax revenues, which equals a big problem. You've got, I think one of the potential triggers that you've referenced in the past is around self-driving cars. So if you don't have parking tickets, if you don't have speeding tickets, source of municipal income out the door. So how do you look to replace that in a world of rapid change, but change that will lead us to a very different place than we've ever been to before? And rethinking that, I think, is probably something that we should be doing sooner rather than later.
Well, look, it's much more difficult to put a new tax in than to convince people that they ought to be paying the taxes that they're used to paying, right? So when you look at autonomous vehicles, assuming at some point down the road, pun intended, by the way, autonomous vehicles become a reality, and assuming that the software that powers autonomous vehicles do not allow for cars to go above the speeding limit, then municipalities and highway authorities and the like are going to have a real problem, because they are very dependent on fines and penalties. And so, in an ideal world, you could just impose new taxes to cover the costs of maintaining this infrastructure, but that's going to be tricky, and I have no doubt there will be attempts to try to make up that revenue somehow. But technology is certainly going to change the architecture of our economic system, as it already is doing, and I don't see any reason why the government will be immune from that. And that speaks to, as you referenced, the 1099 economy, where people pay taxes differently. And in so many other areas, I feel that the pace of innovation is moving along far faster than the rules and regulations are to kind of keep up with how our economy is sort of changing and evolving.
Mm-hmm. One of your other predictions, and this one I want to read through in a bit more detail, in part because I'm sure I would totally butcher it if I tried to recall from memory. But this one says politics meets utility token sales.
Yeah.
Groups across the ideological map battle the trend in which special interests exert undue influence over U.S. elections through unregulated pools of dark money that were boosted by the 2010 Citizens United Supreme Court case. This is achieved through the establishment of 501c4 utility token sales that raise soft crypto money. By 2028, use of so-called citizen voice tokens, or CVTs, is in full swing, given the uncoordinated support CVTs provide for previous presidents and presidential aspirants, including Howard Schultz, Nikki Haley, Cory Booker, Kamala Harris, Ben Sasse, and Dina Powell. So clearly a bit tongue-in-cheek, but interestingly, you could see things like, and I think you personally do see stuff like this, large political issues, social issues, converging with the financial technology that we're currently experimenting with. So, campaign finance reform, huge issue. How do you address that? I don't know. Is there a token angle there? I won't, necessarily ask. Go ahead.
No, I was just going to say, implicit in the prediction is that I don't think the government is going to get its act together around campaign finance reform, and as a result of that, I see, as it has been the case in so many other ways, people getting creative and innovative over time to exploit a system which, in my opinion, is warped, to put it kindly. I mean, elections have become big business in the U.S., and as I'm sure you know, and you probably have met with many of these entrepreneurs, there are people out there cooking up all sorts of ICOs. And I think that there may be a period of retrenchment as more bad guys get caught and more regulations get put out and the like. But I don't see the concept going away entirely. And over time, perhaps that concept will be improved. And meanwhile, you have groups, both on the left and the right, that can spend unlimited amounts of money without having to disclose who they are. And so it's yes, a little bit tongue-in-cheek, but not too much. In the name of free speech, you can do a lot of things. And I don't see any reason why a group that is not coordinated directly with a political candidate couldn't raise money quickly to support their particular point of view or indirectly support their candidate.
So these two predictions and some of what we've discussed today beg the question: what is up with your healthy obsession with politics?
I don't know if it's healthy or not. I started in my career working for Al Gore and Bill Bradley, and then I became a government affairs representative for the Atlantic Richfield Corporation, which is now part of BP. and I got to see how the sausage was made up close and personal. My healthy obsession with politics, as you put it, speaks to the fact that I don't really think you can talk about financial innovation and FinTech without touching on it. It's hard to leave politics out because they help shape so many of the regulations and trends that ultimately create winners and losers, right? I mean, Elizabeth Warren, love her or hate her, helped create the CFPB, and that organization, that body, that regulator, matters a lot to online consumer lenders, right? The DOL fiduciary rule matters a lot to robo-advisors. The concept of regulatory capture matters a lot to large financial institutions. The ESG movement matters a lot to me, first of all, and more importantly, a lot of people out there who want to invest their money in ways that align with their values. But one person's, version of ESG and what is moral and ethical investing is not, consistent with many others. So the back and forth, the trying to figure out what our role is as consumers and what the role is of businesses touches on politics, whether or not you want to go there or not. And so I like to cover it. We sometimes get into a little bit of trouble for doing so, and people have unsubscribed from the newsletter as a result. But I think you need to touch on it in order to do justice to themes around financial innovation.
Well, I suppose on that note, it's worth pointing out the not necessarily unique, but uncommon skill that you have in helping surface important issues like this with very deeply entrenched political overtones without being pedantic, without being instructive, but doing it in a fun, lighthearted way, but that nonetheless encourages people to think hard about what are some major problems that we as society need to deal with.
I appreciate that.
I'd be interested to know, given the size of your distribution and the interaction that you see from your readers, what trending topics you're finding to be of most interest based on the data you generate through your newsletter?
Well, first of all, the most popular segments I run tend to be the interviews I do with financial innovators. The Max Levchin interview I was fortunate enough to do, or the Jay Fulcher one, or the one I did with John Stein. I know you also have interviewed him, or Jennifer Fitzgerald of Policy Genius. They do very well. And I'm always so appreciative when I can get a CEO to take the time to speak with me. And I would add, by the way, that Eric Mouleron, the CEO of Bankable, was the first CEO to give me a shot at an interview. And so I'm eternally grateful to him. Other top performers tend to be the opinion pieces that I feature. One recently by Ariane Schut of Core Innovation Capital blew the doors off. He analyzed 150,000 complaints in the CFPB compliance database and tried to figure out what bothered people. And then he ran those complaints through IBM Watson's tone analyzer to measure the emotional depth of the complaints. And, I titled the piece a GPS for would-be startup entrepreneurs or something like that. The premise being that where people were experiencing the most pain would most likely be the opportunities for new company formation. I wrote a segment on the college tuition crisis entitled "Can Older People Fix It?" Can older people fix the college tuition crisis? Which mentioned a startup named Patronage and a financing concept a friend of mine named Jimmy Lenz taught me about, called income sharing arrangements, where schools and private investors essentially fund students' tuition. That performed very well. I wrote a segment about how Janet Yellen, now that she is no longer Fed chair, should return home to her borough of Brooklyn and take a long walk with me along Smith Street. The point of that piece was that, Smith Street is in the middle of an affluent neighborhood, but several blocks are hollowed out. And I tried to make the connection between that phenomena and how maybe the top line numbers of our economy don't necessarily reflect what's going on. And I suggested it's because of some antiquated tools of measurement of the economy. So those are a few, but as it relates to kind of standard issue blockchain articles or articles about Bitcoin, they have not been performing as well. I still cover them, but I feel like people are encountering some crypto overload as of late. On matters related to insurance and InsurTech, I see a lot of traction these days. I've chosen to put an emphasis on InsurTech, specifically around life insurance, life InsurTech, and those are those pieces are doing well.
So before we go, I need to ask you to fill in some gaps, because I'm not sure I have this story straight, but there was something about you being a newfound Telegram user for your instant messaging needs and the positive impact that's had on your social life.
Well, I don't know if it's positive or negative, but I recently came back from the South by Southwest. I don't even know if you should call it a conference, a festival, the South by Southwest Festival in Austin. And I was at a dinner, and I asked one of the other attendees how they had heard about the party or the dinner, and they had said because they had been invited on their private Telegram network. And I knew of Telegram but hadn't downloaded it, and certainly didn't know how I could be a part of a little private club within Telegram. So I made sure to check that out. You've got to try the things that you write about. And so I have more financial apps on my phone than I'd care to admit to. And it's important to eat your cooking, so to speak. So whether it's Telegram or, the 8 different apps that manage a small amount of my money, I try all these things out.
Yeah. Well, there you go. Telegram is useful for more than just crypto pump and dump schemes.
Absolutely.
Gregg, how can people find out more about your work and connect with you directly?
Oh, that's very kind. You can go to the Financial Revolutionist, and we have plenty of places on the site where you can contact us. You can also sign up for the newsletter, and you can just send me an email as well through the site. Great.
Gregg Schoenberg, thank you very much for joining us today.
Many thanks, Will.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, FinTech, and the future, check out our regular content at www.bankingthefuture.com.